We all know if you have a significant amount of debt, it can affect your credit score. But think on a bigger picture. What if this debt is so large, it is the national debt? And what if the credit rating of the United States was downgraded, which is exactly what we seen happen on Friday? So the stocks future were a little bit lower on Sunday evening, and there was a fresh warning as the US debt and the potential for President Trump's trade war to really heat up again. A lot of worry in the media, a lot of worry in a couple different places, including Moody's downgrade of the United States credit rating one notch. Now, it might not seem like a lot if we're only going down one notch. However, that means that the debt of the United States is getting really extended. And also, this means we're going to have to pay more for the debt we have outstanding, which is kind of crazy to think on a federal level, not just a personal level, not just a financial level, of trying to get this under control. When we start looking at the retreat that we seen on yesterday, US debt warning, again, potential trade warning. The Dow Jones fell 250 points, which is what we've seen. Kind of breaking, and I believe at the end of today, it was kind of flat. The Treasury yield really surged to about 5%. I believe it did hit 5% today, which is kind of crazy with that downgrade of Moody's, again, going from an AA1 from a AAA rating, which is the highest grade that is available on Moody's. Now, it cited the increase over more than a decade in government debt and interest payment ratios to levels that are significantly higher than similar rated sovereigns. So we are paying more and have more debt than a majority of our counterparts when it comes, again, kind of on a sovereign nation level. When it comes big picture, we do not only carry more debt, but we also carry it at a higher interest rate, which if you're familiar with bad debt, if you start looking at credit cards, it is super expensive to carry debt. Now, having some debt, and a lot of people say it's pretty good to have some debt, but it depends on the debt that you have. Now, we know there are a lot of countries that own a big chunk of the government debt, or essentially when it comes to us giving away the country in the type of bonds that we're selling to other countries, they're buying a piece essentially of the United States. When you start thinking about it, that's kind of what it means. So the dollar fell 0.16 against the euro. So seen a little bit of a pullback there on the euro as well as the yen. Gold again rallied, which is kind of crazy. And prices were flat on oil at $62. And of course, when we start thinking bigger picture of every single country, in the world, it makes a big difference. So since the stock market has been on a roll, really since those pause of tariffs, which again, don't buy the news. A lot of people see, tariffs have been paused. It is a 90-day pause. Nothing has been signed as well as I know right now that it hasn't been paused. It hasn't been signed. It's not a deal that is in concrete for 3, 5, 10 years, whatever it may be. There was only a 90-day pause. We have seen the stock market absolutely just on fire. And the S&P right now is just 3% below its peak after a very ferocious rebound. And some see it just continuing to increase, but it also hinges on those tariffs. So what I'm doing personally right now, setting aside some money, just kind of getting it and parking it at a high yield account, making sure and seeing. So what I'm doing, again, thinking of parking money into that high yield savings account is every time I see about a 10% decrease in the market, I am buying and I am going ahead. I'm dollar cost averaging on a regular basis, but I am also doing lump sum investing when I see the market pull back 10% from its all-time high. Now, when we start looking on Friday, reports that US and European Union have begun serious negotiations, lifting the rally that, again, kind of drove a little bit earlier this month. And it seems like the de-escalation with China from 145% tariffs and made a deal with Great Britain, it is stating here. And of course, there is a warning. The Treasury Secretary Scott warned that other countries that are not negotiating in good faith will see tariffs snap back to Liberation Day level. So if they're not willing to work with us on a national scale, we are going to see those tariffs increase, which of course could have a negative impact when it comes to the stock market. Now, when we start looking at the major trade partners, there are really 18 to focus on. They break down, and a majority of it is the larger trade partners, which they're saying we get about 90% of all of our stuff from about 18 major or important trade partners that they talk about making deal with. So when we start looking at, the rate for Central America, the rate of Africa, those could be increased. Now, the Moody's downgrade also limits how much upside the stocks could have, especially if we are looking to borrow more money and if we continue to run a really massive deficit. When you start thinking about personal finance, when you think about financial literacy, financial education, you cannot run in the red forever. We cannot just sell really bonds or sell bills or sell T-bills, whatever it may be, to the American people, to the other countries within the world. We cannot just debt finance everything that we have to really keep this kind of going. There's going to be a point where other countries, either one, are no longer going to buy them or not buy them in a bulk, that they've seen, or a point where they're going to start selling them back to us, which again, we are kind of debt financing the nation, which cannot go on forever. So when we think about the Republican in control of Congress, looking at doing tax cuts, looking at ending, taxes on tips, taxes on overtime, taxes on Social Security, all of this money has to come from somewhere, and it's going to have to come from spending cuts. Don't know exactly what that's going to look like or what it's going to mean. They're even looking at possibly putting and imposing some tax hikes on millionaires to boost the revenue that is going to be offset by the money they're not charging by tips, overtime, Social Security, and really the total impact of these financial decisions will make and add up to trillions if they get it right and budget deficits in the next coming year. So overall, we have to get to a point as a nation that we have a lot more of a balanced budget, whether it's in, a country capacity, if it's on a personal capacity. We are sitting on $1.14 trillion of credit card debt, which is absolutely crazy just to think that is credit card debt. We are not talking about mortgage loans, auto loans, personal debt. We are just talking about, credit card debt. It even excludes student loans. When you start looking at the multitudes of trillions of dollars that Americans have borrowed, it is really driving the economy, but it is also eating into the ability for you to live a debt-free journey, for getting out from those large payments, living the life that you want to, that is really gratifying and satisfying, to make sure that you can do that. Now, when we start looking at a deficit, it is over 1 trillion so far that they've toppled over and hitting true trillion in the prior fiscal years. Debt interest payments alone are now one of the biggest line items in almost the budget for the country, exceeding the Pentagon's budget. So think about that for a minute. When we're paying interest, we have, and it is the biggest spending item we have in the budget, is interest we are paying to other countries that we extended money to. It's kind of crazy. Over the next decade, we expect larger deficits to come, retirement spending, government spending to rise while revenue has stayed broadly flat. And again, Moody's said Friday, in turn, persistent large financial deficits will drive down government spending, and really interest burdens higher could be if we do have to borrow more money. So it seems like we're really between a rock and a hard place. As much as we do want to reduce prices, we want to cut, all of the taxes that we have on Social Security and overtime and everything else, that money has to come from somewhere. And hopefully we can actually get to a positive kind of portfolio where not only are we paying the interest that is required to get the rating up, but also paying down some of the interest or rebuying some of those government bonds that were issued to really bring down the national debt. So, all right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.